Hi guys, I'm Jay, CEO of OKEx, and welcome back to OKEx DeFi Roundtable. For those who missed this series last week, OKEx DeFi Roundtable is a virtual talk series to invite DeFi projects from various segments to talk about their progress, insights, and future developments. Last week, we invited Calvin and Compound to talk about their views on future development of DeFi. I'm still your host and moderator today, and this week, our guest is one of the first movers in DeFi space, MakerDAO, and the head of business development in Maker Foundation, Gregory Di Prisco. Thank you for your coming, Greg, and can you briefly introduce yourself and MakerDAO here?
Yeah, and thank you for having me, by the way. So my name's Greg, and I'm the head of business development at the Maker Foundation. As you may know, the Maker Foundation is different from the MakerDAO. The Maker Foundation is just a company that helps to bootstrap the success of MakerDAO. MakerDAO is a protocol. Now, this protocol powers two things. One is the generation of DAI through vaults. This is where you can deposit collateral into the system and generate DAI, and then DAI itself, which is a stablecoin. And DAI as a stablecoin is soft pegged to the US dollar. So over time, it should maintain parity with USD.
Okay, that's very informative, and so I'm so glad to see you in our roundtable, Greg. And today's topic is make it happen. So the fusion of CeFi and DeFi. There's so much to cover today. Let's just skip the formalities right now and jump right into it. So as one of the pioneers of the field, what do you MakerDAO feel about the recent rocket fuel of DeFi?
It's been both bumpy and exciting, much like any rocket ride. But yeah, no, I think it's wonderful to see that these protocols are finally creeping into the mainstream a little bit. It's nowhere near where we need to be, but it's like you said, it's like rocket fuel. It's a good boost.
Okay, that's good. That's good. And that's I can really see more and more DeFi projects coming up to show their values, make the entire ecosystem richer and richer. Let me pick one of the crucial elements in the system: stablecoin. I guess you know what I'm talking about. Other than some USD pegged stablecoin like USDT, USDC, or USDK, the DAI stablecoin is very different. Why is DAI so special that it has become one of the most popular stablecoins in the DeFi space?
Yeah, that is a great question. So, as you noted, there's two types of stablecoins. There's stablecoins that are simply IOUs for existing dollars that sit in a bank account. And then there's stablecoins like DAI. And what differentiates them is that they actually originate on the blockchain. So it's probably important to note that even any currency is implicitly a stable asset. It's designed in a way that it remains stable towards a basket of goods and services. So for instance, when the Federal Reserve performs monetary policy in the United States, they look at the inflation index, CPI, and they want to see that the dollar is remaining relatively stable to that basket of goods and services. Now, what the other stable coins do is they'll just take those dollars that originate in the legacy system, they'll put them in a bank, and they'll mint a token against them. So the origination process happens in banks. It doesn't happen on the blockchain. With DAI, it's a bit different. With DAI, we're still piggybacking off of that major monetary policy, the stability versus CPI, which is the US dollar. But the origination of that asset is not happening in the legacy system. The origination is happening on the blockchain. And that's a really, in my opinion, a very special and significant advancement from a technological standpoint. But it also has tangible benefits. So because the other stablecoins originate in the legacy banking system, they can only offer you as much as the legacy system can offer you. It's a minor improvement, not an order of magnitude improvement.
Right.
With DAI, we are completely detached from that system. We exist only in the blockchain right now. So the tangible benefit of this historically has been that DAI commands a higher savings rate than these other products, because we don't have to just offer you what the banks offer us. The protocol can offer whatever it organically needs to keep DAI stable.
Okay, that's very interesting. So it all comes down to the first is originality, the provenance of stablecoin. Okay, that's very cool. That's very cool. And my next question is, well, let's just dive a little bit more into DAI right now. The MakerDAO community give a green light towards accepting paper chain and console freights token as crypto collateral last month. Can we see more and more real world assets to be added into MakerDAO's ecosystem in the future?
Yes. So first, let me just step back for a second and talk a little bit about our collateral onboarding process.
Okay.
Because as of today, you can't actually generate DAI against those two assets yet. What happened was they were passed through a green light poll. Now, the way that our asset onboarding works is it's entirely community driven. The Maker Foundation has no input in what assets enter the protocol and what don't. The way that our community interacts with the protocol is through this social framework called the Maker Improvement Proposals. Now, Maker Improvement Proposals outline a lot of things. One of those is the process by which collateral actually enters the protocol and can generate DAI. Right. So the first step in that process is what we call a green light poll. This is where the Maker holders will vote and they'll prioritize what assets they'd like to see enter the protocol. This will then kickstart the internal and external processes of actually onboarding those assets. So what you saw was that console freight and paper chain, they were put very high on the green light list. So the Maker holders very much want these assets, but now there's still a lot of work to be done to get them into the protocol. But on that note, I think that this is going to be a major trend. The only way that DeFi becomes useful to anybody outside of the blockchain space is if we can make it useful to these legacy participants. If we can't service the console freights and paper chains of the world, if we can't service even small banks, if they want credit origination through MakerDAO, if we can't service that, then we haven't really achieved anything, because the DAI supply will always be stunted by the blockchain ecosystem. So in my opinion, real world assets are going to be the next major turn for DeFi over the next 12 months. Okay.
So basically it's up to the community. They vote for which one as they want to want MakerDAO to adopt the assets, right?
Yes, and the community of Maker holders performs every activity in our protocol. Maker is completely decentralized. There's no centralized functions that control any single parameter.
Okay, that's cool. That's very interesting. Now, the move of adding real-world assets really makes me think MakerDAO prefers treating the traditional financial system as more of companions instead of competitors. Can you tell us how Maker considers the role of CeFi in the development of DeFi? Do they complement or repel from each other?
They do both, because in some instances we will have competitors, but in most instances we will have complements and components. I actually think a great way to highlight this, even at the micro scale we're at today, is the fact that USDC and TrueUSD are both collateral assets in the Maker protocol. So while on some fronts we compete with those two entities because they produce stable coins that compete for demand with DAI, they also are very useful to us because other dollars, especially high quality ones that are regulated in the United States, they can be really good sources of collateral to generate DAI in the first place. So I think to paint DeFi and CeFi as two different worlds is almost a mistake, because at the end of the day, we're talking about the same pool of value. And it goes back to the concept of how money originates in the first place. Money originates as credit against assets. So assets are implicitly real. And it's only very recently that we even have assets that are native to blockchains. So if we want to bring value into the world at all, we need to be able to access as many assets as possible.
Okay, so that sounds very good. Yeah, I think it's more like collectively. You want to adopt the more assets as much as possible, right?
Hmm.
Okay. Well, it sounds just like us. And OKEx and MakerDAO have been working very well together these years. Say, DAI saving rate was integrated on OKEx pool a few months ago.
Yeah.
So, what do you expect the centralized players like us to do more to facilitate DeFi space?
I mean, I think what you guys done so far is amazing. You know, you provide us that very important bridge to the traders that need our products. So because DAI has a higher savings rate, that's great. But if it doesn't have the distribution channels like OKEx to let that reach the end consumer, then it exists in a vacuum. So in order to actually make a difference in the world, you don't just need a great product, but you need great distribution channels. And that's where I think OKEx has been a great partner.
Oh, that's nicely put. Okay. The it's very interesting that cool. What is MakerDAO's plan for the rest of 2020? Any projection towards the whole cryptocurrency and the DeFi industry this year?
Yes. So what's exciting about watching our progress is that you can actually see it unfold in real time. It's not like you'll see an announcement come from the Maker Foundation and then it happens 6 months later. You actually watch these things get conceived and ideated upon in our forums. Because if you remember, every decision in the MakerDAO happens at the community level. So some of the more interesting proposals that I've seen thrown out there right now, uh, as you probably know, there was a lot of uh, volatility in the space back in March, and that led to some unfortunate consequences for a lot of DeFi protocols, including MakerDAO. Well, one of the key takeaways we learned from that episode of volatility is that we need better auction systems to liquidate collateral. And over the past few months, the community has been figuring out new ways to liquidate the collateral that will make the whole process much more efficient and the whole system much safer. Another interesting proposal that's been, it's more recent, but it's very powerful, is called the peg stability module. Mm-hmm. And this is where it would actually let you purchase DAI from the DAO, newly minted DAI, with other stablecoins. So this could potentially open up a massive source of liquidity in DAI, while also making the peg more stable around $1.
Right. That's very interesting. Yeah, it's very enlightening. Greg, we love to see more and more talents into both crypto and the DeFi space. Final question, would you suggest one word to describe the future of DeFi and why?
Well, that's hard. Oh, only one word. I guess I would say.
You can do 1.5.
You know what? I'm gonna surprise you. My one word is invisible. Because I think DeFi will be pervasive and it will be everywhere. You won't know you're using DeFi, but it will slowly start to take over the global financial system to the point where everybody will be using DeFi. They just won't know it. It will almost be invisible behind the scenes.
Okay, that's a very good word, invisible. Like, yeah, it's I can visualize it. I can visualize
like kind of like the internet. You know, we're using the internet right now, but there's nothing that really tells us we're using the internet. We just know.
Right. That's right. Okay. Well, Greg, it's very nice talking to you, and thank you for your time. And hopefully, and we can talk again in the future, near future. And yeah, any else? You have any questions for us, or?
No, I just want to say thank you for having me, and a big hello to the whole OKEx community.
Okay. Thank you, Greg. Bye now.
Bye, Jay.
Bye.